Hi, welcome to Market Alert for Wednesday, the 4th of March 2020. So, not so super Tuesday, Fed shock and all fails, sparks market turmoil. As it says here, epic fail. Too right, it's an epic fail. It goes to show you that they're in panic mode, and that's one of the other headlines as well that we see here today, if I can find it. I think it's near the top. Here we go. It smells like panic. We're too right, it's panic. 0.5% is massive, given that the Fed's fund rate, I think, is 2%, or was anyway. Yeah, and it didn't help, as we'll see from the chart. So you can see here the announcement. The market moved up. Wait for it. A massive 664 points low to high. In this move. Massive, only 2 points off 666, I will say no more. But yeah, and the volumes in the pre-market session were massive as well. I thought this was wrong, but I've been and checked, and wow, was certainly a lot of turmoil. But of course, as ever, as we've seen many times before, the market put in the high, retraced, came back towards the 76, didn't quite make it, and then went south, and the market stayed that way until we got a bit of a bounce towards the end of the session. But the range for yesterday of this session, if we go for there to 9 p.m, just around about there, yesterday, low to high, we had 1,377 points. So massive. And the average pip per bar, or points per bar, was 153 in a 5-minute chart. Massive. Absolutely massive. And very difficult to trade because of the whipsaw nature of the bars. And the slippage is quite something at the moment as well. But overnight, the market has moved sideways to higher, which we can see there, and is currently sitting at a very important area, the 200 MA and the DP level. News today, what have we got? We got ADP non-farm at 1:15 and 3 p.m. we got the manufacturing figures. Like I say, really the news is not important this week. The main news has been out this week, and it didn't make a lot of difference to the market. We see the Dow down yesterday. The volume is not, it's still huge. It's just not above average. But look across to the left, because of the huge amount of volume that we've had. This looks like it's not, but it is. It's still a huge amount of selling there. Markets, I say, put in a bit of a reversal on the overnight. What I would be looking for here is the market to fail to close above this area here, 26,748. That's where I would look for resistance, and also, of course, the 200 MA. Let me just turn these crosshairs over to the off position there. Yeah, so a bit of a rally going on at the moment for the Dow. Meanwhile, the implied volatility picked up yesterday, went to 33.72. Just zoom in there. 33.72 as prices started to drop once more, but have since reversed. And then we've got again, you can see the red starting to increase here as well, even though prices were sideways to lower. Good news on the bond front, but then they've cut rates. The 3-month 10-year yield 0.07 for yesterday. So yeah, let's see what happens today as the wild trading continues. It's incredibly volatile, and it's going to take a moment or two before things start to settle down. That's for sure, if not get worse in the interim. Okay, that will do it for this one. If there is anything else to report, apart from what we've got, the financial globe falling apart around our ears, then I will let you know. But otherwise, have a good day, and as ever, thanks for watching. See you in the next one.